You may already know that your traditional 30-year fixed mortgage, you'll end up paying back more than twice the amount that you borrow. However, every day, more and more Americans are learning how to cut their mortgage interest expense in half by paying off their mortgages in less than half the time without changing any of their current spending habits. In the next 2 minutes, I'm going to show you how they're doing it, depositing the same amount of money into your checking account every month, keeping your mortgage payment the same, and keeping all your other spending habits the same. So what's the difference? It sounds too good to be true, but it is true. And it's not magic, it's just math, because it's been available for decades in other countries. Many people in the US have mimicked the process using a home equity line of credit. However, nearly 20 years ago, CMG automated the process by developing the market for what we now call the all-in-one loan. It's available exclusively from CMG, one of the top 20 mortgage lenders in America. Since 2005, we've seen tens of thousands of homeowners just like you pay off their mortgages in less than half the time. How fast? Well, that's really up to you. Here's how it works. Let's say you have a traditional mortgage. Doesn't matter if it's $100,000 or $3 million. But for the sake of example, let's say it's $300,000. With your traditional mortgage, you'll pay interest on that whole $300,000. But with the all-in-one, your $300,000 mortgage is offset every night by the funds that you normally keep in your checking and low-yielding savings account. Let's say you have income of $6,000 a month and you keep at least 3 times your income in savings as an emergency fund. That's $18,000 in savings. With the all-in-one, your $300,000 is offset by that $18,000, so you now only pay interest on $282,000 instead of on $300,000. Now here's the really powerful part. We said that you also have income of $6,000 that comes in every month into your checking account. So now whether it stays in your checking account for 1 day or 31 days, every dollar that sits in your checking account until you need it now offsets your mortgage interest expense by lowering your mortgage balance every night. And that means the day that your income comes in, you're now only paying interest on $276,000 instead of $300,000. So, would you rather pay interest on $300,000 or interest on $276,000? You see, it's not magic, it's just math. But no other traditional mortgage allows you to do that. If you pay it down, you can't get those funds back without refinancing, or in a worst case scenario, being forced to sell. The last thing to keep in mind, at current rates, let's say your payment on your traditional mortgage was $2,000 principal and interest. With the all-in-one, remember I said you're going to pay it off in less than half the time without changing your spending habits. So you keep your mortgage payment the same. In this example, $2,000 a month. But because the balance that you're paying interest on is only $276,000 instead of $300,000, that means that more of your payment is being applied towards principal reduction rather than interest. That means your starting principal is now even lower the next month. So more of that same monthly payment is going to get applied towards paying down your principal faster and faster every month. And this is how our all-in-one clients have been able to pay off their mortgages in less than half the time. Now the only catch is it doesn't work for everyone. But if you're financially responsible, if you have great credit, and if you earn more than you spend, then you owe it to yourself to set a no-obligation appointment, either in person or by Zoom, where we can discuss your exact scenario to see if it would work for you. Use the calendar link in the description box below. For alternative times, such as evening or weekends, just email or text me and we'll find a time that works. Think about it. The last time you shopped for a mortgage, you probably tried to find someone that could save you 1/8%. On that $300,000 mortgage, that 1/8% lower rate would save you less than $26 a month. That's less than $9,400 spread out over the entire 30-year life of the loan. But with the all-in-one, on that same $300,000 mortgage, you could save $100,000 and in many cases far more by cutting both the life of your loan and your loan interest expense in less than half. So invest a few minutes of your time. Find out how much you could save. Use the links in the description box below or text me right now at 847-612-5626. I look forward to hearing from you.